Friends, I'm going to talk to you on the topic the result season so far. We went into this result season with high expectations in defensives. We expected IT to do very well. We thought consumer businesses would do decently. We were a little doubtful on pharma. That was how we looked at defensive companies. But the result season has completely inverted the pyramid. Pharma, especially consumer facing pharma in India, has done exceptionally well. IT has been a disappointment, and consumer businesses seem to be heading into rough weather. So, this result season so far has completely mixed it all up. Going forward, we are going to see companies which are smaller come up with results. That's a space where expectations are running even higher. People expect smaller companies to perform better than the bigger companies. That's why we see so much of capital go chasing small companies. We expect mid-cap companies to do better than the large companies, but not as well as the small companies. That's why we see more capital chasing mid-cap than we see capital chasing large-cap. So expectations are clearly running high in both mid-cap and small-cap spaces. Expectations are running crazy in micro-cap. So we'll not even talk about that. And expectations are out of their mind in SME stocks. So we are not going to go anywhere near that. So when expectations are running higher than they must, that sets up the ground for disappointment whenever performance lags. When you price stocks too close to perfection, the margin for error is negligible. This is a very simple truth in investing. Yet, we always tend to price stocks not just close to perfection, beyond perfection, because our anxiety is very high and we don't want to miss out on any action. In a market driven by flows, this anxiety goes up dramatically. It goes up geometrically, exponentially, and people tend to throw capital at ideas. We have been seeing this for the last 90 days or even a little longer than that. I don't know how long this will happen, but I am sure that given the very limited margin for error, any underperformance will get punished. Any company which does not live up to the market expectations will get punished. Any company that has overpromised and failed to deliver or under-delivered will be punished. Any company which is intransparent and the market has on its own raised expectations because it didn't have a guidance from the company will need to live up to the market's expectations. If it fails to live up to the market's expectations, the stock price will be punished. So the setting is nicely constructed with a bias towards punishment. Now let's talk about rewards. Where will rewards happen in this result season? Wherever the market is having low expectations or no expectations or negative expectations, and the company performs beyond what the markets are setting for that company as expectations. This is very easy for the companies, right? When you lower the expectation, company will perform better. So there the market may cheer, but once again that cheer has to last, and that is not easy. You need sustained performance, you need sustained visibility, and you need better incremental numbers to come from the company. Where the market has negative expectations and the company has positively surprised, there the move will be even stronger. It's not going to be soft. And where we see investors under-invested in a space and the company delivering unexpectedly good performance, then the rush of blood will be high among investors to that result. And you will see people chasing such companies. Overall, this result season is running rings around investors. It's not predictable. as in the past. And companies are also making it more difficult for investors by mixing things up. Mixing up expectation, mixing up guidance, and mixing up performance. So it's been very interesting to track various results, to understand the trends, to make sense of this expectation setting and performance, and to closely evaluate whether guidance is sustaining, improving, or getting lowered. This is a market where one must be very attentive. One must do his research continuously, and one must be prepared to wait till he gets clarity in his thought process about investment ideas. If you are going to rush yourself based on what you see, you could be running down the wrong street. So you will not be able to go to your investment destination and meet your investment goals. So this is a market where the investor must take more responsibility. This is a market where the investor must take ownership for his actions far more than he did in the past. Thank you for watching this video.